Good morning, everyone. It's Ben Buckner with Ag Resource Company in Chicago. It is Wednesday, June 25th. Dan Bosse is currently attending the Kansas City Fed's meeting in agriculture this week, so he is out today. But we've got markets that are calm in the macro space. The equities, crude just a little bit firmer this morning, but the ag market, the theme is still one of extracting risk premium, which is not uncommon for the last week of June. If you don't see major northern hemisphere or U.S. specific weather threats, and we don't see that this morning still. We'll kind of touch on what the next 5 days at least look like in terms of rainfall in the U.S. I think the news driving markets this week is, again, like we mentioned yesterday, the collision between the absence of U.S. weather threats and also just the difficulty the U.S. is going to have in clearing large crops because of competition. I think hot news in the last 24 hours or so has been new estimates surrounding Brazil's safrinha or winter corn crop, and they continue to rise, and in fact, they are starting to surge. Pretty widely followed firm in Brazil, Agroconsult, estimated the total Brazilian corn crop on Tuesday at 150 million tons. It's a substantially higher than even their last estimate. So their safrinha crop estimate is 10 million tons higher than it was in May. And what's being cited is just this abnormally ideal, almost perfect growing season. And so we will have to pay more attention to combine yield data. Mato Grosso's safrinha crop should be about 20-25% harvested this week. And we're watching ship lineups and just how much Brazilian corn will be exported, committed to the export market in the month of July, which is a pretty key month. But the risk, I think, for the corn market is that competition from South America will be much, much higher than it was last year and kind of getting close to the records that we saw a couple of years ago. So it does look to be a monster Brazilian crop. And we can all debate whether it's 138, 145, or 150 million tons, but it is getting larger. And so even if we start to give some of this surplus to the domestic market, their ethanol production and consumption, it has been expanding pretty rapidly over the last 5 years. We at Ag Resource still think, at minimum, Brazil will be able to export, 47, 48, maybe 49 million tons of corn in the 24-25 crop year, which extends into, the winter of 2026. And so this corn does come online to the world market in the next 45 days or so. And we're concerned that those FOB offers that have been pretty stable to date do get very aggressive once we do reach, 40 or 50% harvested in safrinha corn, in the sort of middle or end of July. So again, we'll be paying very, very close attention to the Brazilian cash corn market, given what probably is this near record surplus there. And so that is the risk, I think, to the U.S. market. Again, cash markets having to sort out, record production maybe in Brazil and also probably record production in the United States. There's going to be a lot of physical supply availability. So that is, I think, the beginning and end to explaining this week's price direction and price action is, again, the shedding of risk premium. And so if the Agroconsult is correct and the Brazilian total corn crop this year is 150 million tons, you could raise, exports of Brazilian corn to, 52, 53 million tons. We're getting very, very close to the 2022 year's all-time record. So Brazil, like the U.S., probably forced to clear excess inventories, and that's, competition for export demand for corn will be very high. It's never bullish of the market in the long run. So that explains, I think, why we are where we are. And there is still evidence to support just these soaring safrinha crop estimates. The Brazilian rainy season seemingly has yet to end. It typically ends, the last week of April, first week of May, but that just hasn't been the case. So what you're seeing here is just rainfall since, June 15th to June 24th, and in Mato Grosso, 1 to 1.5 inches, highly abnormal. This is falling too as the crop kind of the tail end of pollination or even in the grain fill stage. Mato Grosso do Sul, parts of Goiás as well, saw some really abnormal, unexpected rainfall. The maps for May also look very, very good. Rained quite a bit in May, rained a lot in the second half of June. That's just something that we normally don't see. And so I think that is what provides the evidence to these, all-time record safrinha corn yields. This is about 500 to 1,200% of normal, given it usually just does not rain at all in the month of June in northern Brazil, but it is still raining. So like the U.S., kind of warmth, abundance of rain is working to support Brazilian corn yields. And keep in mind that usually we're debating Brazilian safrinha corn yields between 85, 95 bushels an acre. And so this would just imply a yield of 105 to 110 bushels an acre. So mathematically, it is possible. Again, we will be monitoring harvest data, cash markets there very closely, but just wanted to communicate that it did rain in the second half of June. That's something we really haven't seen before since the Brazilian safrinha crop became a real market issue in 2014, 2015. And so what we're probably going to be seeing is with seasonal surge in export commitments from Brazil, the details will be important, and to what extent does Brazil start to ship and sell a lot of corn into the export market. But this is forthcoming. It has been slow to date. I think this is mostly a function of harvests being delayed. But even in years where exports aren't terribly robust out of Brazil, they do commit a lot into the world market starting in July. So we all want clients to be prepared for this. The real beginning of the export competition season for the corn market does lie ahead. And Brazil's winter corn crop, I think, will be so large that they will be pretty active in the market until the latter part of 2025, maybe the early part of 2026. So this competition will be around almost indefinitely, or until we start to worry about next year's South American corn yields and production. So the Brazilian crop just being a monster, I think, is what's important this week. And just kind of touching on U.S. weather, again, here's NOAA's 5-day precip outlay. The 5-day forecast is, of course, what we have the most confidence in. It's been very consistent, not much change from the last couple of days. Iowa, Minnesota, eastern Nebraska, where drought still exists, do get soaked over the next 5 days. A rainfall of 2 to 3, maybe 4 inches. It's going to solve a lot of drought issues, and I suspect the drought monitor next week may show a near elimination of abnormal dryness in eastern Nebraska, and that's important. So we've got adequate soil moisture in most places, and if we add the plains to that, that also gives us, I think, at least model-based evidence for trend above trend yields in both corn and soybeans today. So again, it looks wet. The extended range forecast, again, kind of the feature is warmth, but an abundance of rainfall, kind of greenhouse growing conditions. And so we're still trading, I think, totally normal seasonal patterns. Again, price reactions and action has been pretty unremarkable over the last 30 days. Corn kind of following normal seasonal trends, just checking off the supply risk box in the U.S. and now especially in Brazil. And also soybeans, doing what they always do, kind of waiting until maybe the first week of July. But if you don't see a lot of threats in the forecast or threats to U.S. supplies come harvest, come autumn, you start to shed premium as well. So soybeans, seasonal downtrend is a little bit delayed relative to corn, but I think it is forthcoming unless you have a Chinese trade deal, which we don't see any evidence of, or kind of a quick evolution to heat and dryness in the U.S., which today we don't have a lot of evidence to support as well. So if you think about following normal seasonal trends over the next 45, 60 days, you still have targets of about $3.90, $4 spot corn, and ultimately kind of $9.80 to $10 spot soybean. So there is risk in the soybean market now, again, if you don't see weather threats heading into sort of the final portion of June, very early July. And so that's, I think, what's driving the market. It's fairly simple. Competition to clear excess inventories out of the U.S. is going to be pretty steep. Argentina selling things pretty quickly. Probably got to contend with very cheap offers forthcoming from Brazil. And then, of course, just what seems to be near ideal U.S. growing conditions. And we're starting to look into the first week of July, and there's not a lot of heat and, again, an abundance of rain. So just the markets are more actively and increasingly digesting what's probably, for the first time in a couple of years, a pretty meaningful build in U.S. and global grain and oilseed inventory. So at what price do we start to encourage forward consumption from importers, clearing excess supplies, increasing biofuel margins? That's sort of the goal of the market now. So we'll be outlaying all this stuff, and we've got the June 30th stocks and seedings report, which will be very critical. We'll all be analyzed in depth, and $1 get you in for just 30 days. So be sure to check all that out. So managing risk is still the name of the game to us, at least for the next couple of weeks. And we are looking at kind of downtrends that probably don't change, but be prepared for recoveries and taking some actions with respect to risk management. So as usual, all the best in the market today. We'll get at you tomorrow. Dan and I both will be back. And so have a good day and talk to you tomorrow.